greater 50%, and hence the name Greater 50. And as so this gets also added to the strength of the women's strength and the women empowerment role that we want to showcase as FICCI and FICCI Ladies organization. Many of you are showcasing today. We will share the details of Greater 50% with all of you. So please do sign up to be either a mentor or a volunteer to help many others who would want to kind of get into these or related areas, and you can actually help them walk through to the path of success. So with these words, I thank you all once again for being with us this morning. And I do certainly hope that you will find the presentations useful. Also, my request to all the participants to please share the feedback as well, because that always helps us improve our work going forward. And a special thank you to Amazon Pay team for partnering with us, sponsoring the initiative today. Which is very, very important to do these kind of programs. It really gives us a lot of strength. And back, I'll hand over to Sudhakar from here to take the proceedings forward. Over to you, Sudhakar.
Yeah, thanks, Jyoti. Good morning to all of you. Thanks for coming to today's showcase. As many of you will know, FICCI has been doing these showcases in FinTech over the last few months. And the response has been phenomenal, both from the participant side as well as the presenters. We've seen some phenomenal companies that have come up and showcased their products and capabilities here, and it's resulted in a lot of conversations thereafter. And various categories have been done, and very happy to see the kind of work that's been done in the fintech space. And today we're going to have a category that is women-led. As Jyoti covered it, this is part of the FICCI's mandate to focus on the better 50, if I may say so. And many of these companies that are coming to present today have won awards in our pickup conference. So they have stood their own amongst the others, and we are presenting the best of the best in many of these categories. So today we are presenting companies that have been led by women across various aspects of fintech. Hope to have a wonderful session and hope to see some great products and good discussions from all the presenters. With that, I'll hand it over to Supriya, who will be monitoring and moderating the sessions today. And she'll lay out the ground rules, and we can take it forward from there. Thanks to everybody.
Thank you, Sudhakarji. It's a pleasure to moderate a panel which is led by women entrepreneurs. But before we start, I would just like to mention a few standard guidelines so that we are able to complete well in time. Each presenter will get 10 minutes to present, followed by 5 minutes of question answers. I request all the presenters to stick to the timelines so that there is ample scope for question answers by the participants. Also, participants, in case there are any questions that you need to ask the presenters, you can put it in the chat box or question answer section, and we will take it one by one. With this, I now start inviting the presenters, and the first presenter of the day is Ms. Saru Tumuluri from Khosla Labs. Saru? Saru, are you there?
Yes, I'm here. Sorry, I was on mute. Hi, Supriya. Thank you so much. Thank you for inviting all of us women for this event. I think this is well in time and very, very timely considering Dussehra and the woman power and woman energies. So with that, let me share my presentation. Give me just 1 minute. I hope everyone can see my presentation.
Yes, we can. Can you maximize it so that the entire screen is visible? Yes, now it is better.
Perfect, perfect. So thank you all. I represent Khosla Labs. I'm the CEO of Khosla Labs. And Khosla Labs itself has gone through a couple of pivots from being a technology incubation firm to being a product company. And our signature product or platform is Verified Digital. It's a KYC, digital identity, and a digital onboarding platform. Now, as we go through, we will understand the significance of players like us. I mean, we are an infrastructure player. We are laying the rules. We are basically building the highways, if you may, for all the fintech expansion to happen in the country. So our vision statement is to emerge as India's leading digital identity, KYC, and onboarding solution provider. We would like to play a significant part in the fintech growth of India. And what do we do for that? We provide SaaS, which is software as a service, APIs or SDKs, and we enable many enterprises, not only fintech, many other enterprises to become digital, right? So know your customer better, know them in a verified manner, allow onboarding to happen completely paperless and presencelessly. That's kind of what we do. Now, what do we use for that? We have a lot of AI enabled solutions where we take government IDs and we take the face as a biometric and we help verify that. If you could, Suprema, give me a minute. I think I'm being asked to turn my video on. Hold on a minute. I hope my video is turned on. Yes, it has. Yeah. So moving on. We have been lucky enough to secure the funding from Khosla Ventures. Though of course Khosla Labs is part of his name, it did start out as an incubator. So we did have to prove our worth in front of Khosla Ventures. We raised 2 million funding in November 2018, and since then we've actually pivoted from being a incubation firm to being a product company. Who are we? I mean, we have, of course, been guided by Vinod. Some of our team members, Shrikant is a chairman, and he was the ex-CTO of the UIDI project. So we do get guidance from him. And that's me in the far right. Now, we've had a lot of clients over the period of time. I mean, we've been pretty much live as a product for the last 2.5, 3 years. And these are the various clients that we work with. What is it that we do? If you look at this, this is the vision we have for India. India has many regulators, as we all know. There's UIDAI in the top left. We have Certifying Authority of India. We have NPCI. We have the DigiLocker. We have GST, etc. How do we make all these services easy for enterprises to consume, whether they're fintechs or banks or neobanks now, or e-commerce companies, etc. So we have built many solutions, almost like Lego blocks, where somebody can come and use us in a manner that they can subscribe to us. They can say, hey, I want eKYC, or I want e-sign, I want e-natch, which is recurring payments in a digital manner. And we support all the biometrics here, whether it's simple OTP or the fingerprint biometric or iris the biometric or the face biometric. So this is what we do in the platform. Of course, our vision mission statement aligns with this. We'd like to digitize and automate. We reduce fraud considerably. We ensure compliance because all these rails are usually regulated rails. And we have a completely microservices based architecture, which is multi-tenanted and can scale both horizontally and vertically. Clients that we tend to get, fintechs are the big clients. BFSI, fintech make a huge proportion. We're seeing very interesting use cases. Matrimonial companies, some of the large matrimonial companies work with us. You would think, why? I mean, when you are talking to an individual on the other end, you would want to know who they are, right? So gaming companies, seeing a huge increase in gaming companies. E-commerce companies use us for people on the field. Pyramid Industries uses us so that their agents on the field are verified to know that they have gone to the store. Shared economy. Ola has been one of our large clients. They would like to verify the identity of the driver, right? I mean, is the driver who he says he is? So things like that. Now, slew of our solutions. We started with Aadhaar, so we offer a lot of solutions around Aadhaar. We've developed our own IP around face as a biometric. We do signature, we do payments. We've also ventured into e-stamp, which is a e-stamp of India, or the stamp paper through an API. And we do various standalone APIs. And as most of you must have heard the adage, APIs are going to eat the world. So we believe that we offer these Lego blocks, which are extremely pertinent, while some of my esteemed colleagues are doing B2C products, whether it's a neobank or an insurtech. A lot of our solutions can be used by them or are being used by them. So KYC is a bedrock. KYC is useful all around the world. KYC is know your customer, right? Whether it's digital identity or KYC, needs are there all around the world. So what is it we've built? We built a very simple under 30 seconds or an under 1 minute match where a consumer shows their ID, shows their face, and we actually extract the face from the ID, verify the ID on the back end, match it with the face in the live stream, and in a very quick, like I said, most likely under 1 minute, we give a response back to the calling program. Lots happening under the hoods. There's ID detection and classifying happening. There's parsing, there's document verification. There is the selfie capture, ensuring it's not a photograph, but it's a live person out there. And then finally the biometric match. And this is where the importance of our smartphones, because a lot of us in Aadhaar world in India know it emerged from the fingerprint, right? But a fingerprint needs an external device because your phone fingerprint, your thumb, or whichever finger you're verifying against. Iris, great identifier, but we don't have we don't have phones with dual cameras. So guess what? Your face is emerging as the most powerful indicator, and which is your phone. So this is what we're trying to provide to our partners. We have a very, very highly scalable machine learning pipeline. We generate data, we augment data, we continuously, our pipeline is learning on the data. And we've been able to achieve extremely high accuracy rate. I mean, I have an amazing tech team who builds all this out. Moving on. So the digital identity. And these are the same tenants that are available for all entities around the world. So sitting out here in India, we do have a chance to also work with the global companies, right? So whether it's ID documents that we start training our models in, whether it's liveness, do you want to do liveness with a blink or a gesture, speech to text? Should we be a combination, right? So many actions that we support. And of course, finally, the face match. So like I said, ID detection, liveness, face match, that's one of our digital KYC products. This is under the hoods, like I said, a lot of matches, a lot of accuracy putting in. We also offer a hybrid product. You want the machine or the algorithm or the ML classification model to do what it's doing and then have a human look it up. We offer that to you as well. So this is where we offer digital KYC with human verification. To distribute, we can send it as a simple link because banks in our country every 2 years they have to KYC. You as an entity might want to KYC your customers every once in a while. So it's a very simple SMS link or a WhatsApp link, and guess what? You can KYC your customers. Very simple solution, very pertinent, loved by our clients. Video ID KYC. This is a new guideline that came in, thankfully, in February of 2020. I mean, I'm sure RBI didn't know COVID was happening, but extremely timely measure. We are live with many banks on this, right? And this is with a live video, with the agent and the customer on the live video, yet the algorithm doing a lot of things. The algorithm capturing the face, matching with ID. We've shown a PAN card in here. It could be any ID, it could be any country. So this is a product that's been very popular. Of course, this is some of the guidelines of RBI, right? Now, what do? We've, of course, included Aadhaar in there. We've built flows where there's absolutely no app dependency. We, again, can send a SMS link or a WhatsApp. We support a lot of flows. We make it API driven. We have a lot of banks using us where finally the PII, which is personal identity information data, is pushed back to their document management system or to their core banking system. So we are a completely API-driven framework. We support Maker Checker, which is essentially in the banking industry. We capture a lot of documents. We're enhancing it a lot so that a live video, and now with COVID, we all know we use WhatsApp video, we use Zoom video, we use WebEx, we use Google Hangouts. So video is the new, and as everybody says, right, voice, video, vernacular. So we are very much in the video side of things. So again, a lot of salient features of our video KYC product, correct? We also offer something very pertinent to India, which is offline Aadhaar KYC. This is what happened after the Supreme Court judgment came out. They said, hey, private entities can't offer Aadhaar, but we can do something called offline Aadhaar, where the customer shares the XML with us. We use, or rather, we support this as well. So a little bit of under the hoods, what happens with OKYC. Moving on, we started with Aadhaar. So we support the Aadhaar ecosystem for many, many small finance banks. A lot of them work with us where they can outsource the entire Aadhaar reg tech, as we call it, regulatory technology to us. We take care of all of that, whether it's certain audits, whether it's complying with whatever the latest guidelines are, whether it's Aadhaar Vault, whether it's ensuring there's an HSM in there. We take care of the works. So this is a product or a solution very, very popular with regulated entities. We manage the entire eKYC and Aadhaar auth flows for them, right? And we also manage various devices on the field for them. We do something called Aadhaar masking, which again became a compliant need. So again, various solutions, various ways we distribute. We distribute it as SDKs, we distribute it as APIs, or sometimes we host it even on the premises of the client. So again, back to what is our core IP. Over the years, we built computer vision technology, we built face recognition technology. We have robotic process automation, right? You want something to be automated in your flows completely. That is something we do. Liveness detection, very, very important part. Right? A newer product we are launching is a digital onboarding product. We are helping entities and specifically working with banks as beta customers to onboard entities, whether it's a corporate entity, whether it's an end consumer, with documents involved, with e-sign involved. A very, very flexible workflow-driven system. This is something we are going live with. So a bit of where we are, we've of course started with India. We can get into the global space with the video KYC product, and we plan to get into the US as well. So this is some of the roadmap thoughts that we have. We have e-sign. E-sign also hiccuped in India. It started with a flare and a flourish, but the Aadhaar judgment of September 2018, for those of you who are following it, huge setback. But we're recovering. We're coming back from all of that. And so very, very simple, nifty product. It's DocuSign for India, right? You can use e-sign. You can take the Aadhaar of a customer and have him sign the document. And it could be any document. And this is permissible by the Central Certifying Authority of India. We do something called eNACH, which is, like I said, it's for recurring payments. We are certified with NPCI. We make all these regulated digital highways very, very easy for our clients to consume. Because all of this requires certification, it requires yearly audits. So that is where we take all of this away from the complexities, away from our end customers. So eNACH is a very, very powerful product. Of course, UPI has taken off much more than eNACH, but eNACH is protected for the lender. The lender is protected by the cancel check protection. Again, we do a link-based eNACH as well. And moving from all this basic face recognition, and this is getting popular throughout the world, this is something we offer as APIs as well. And of course, we offer a lot of other APIs which are very pertinent to India. We do Aadhaar verification, PAN, bank account, GST, etc. A new product we are trying to foray into, Verify Stamp, right? We're trying to give a stamp paper, a bit of a detailed flow, but we're trying to give a stamp paper as an API. So that's what we do, folks. That's what my company does. That is what the platform we built, Verify Digital, does. And we are helping, being a very, very strong enabler for the fintech industry to grow. So fintechs, like again, my colleagues like Mabel and others can focus to do what they can do best. Get the SMEs to have current accounts, offer services, and not worry about a lot of these underlying necessities that we as companies can take care of. So with that, I'll end my presentation. Thank you so very much.
Thank you, Saru, for a very, very interesting and comprehensive presentation. Let me see any questions that are there. At the moment, there are no questions here in my chat box.
I have a question.
I think there is a question, Supriya.
Yes, sir. You can ask, please.
Supriya, I would like to ask from Saru about the API for e-stamping.
Yes.
Are you replacing the physical stamp paper? How is it?
Yes.
How does it operate?
So, Mr. Mohan, that is the idea. Today, the stamp papers are not central or not federated. Every state has its own way of procuring the stamp paper.
Correct.
So, the idea of this product is that we work with the various states, whether the state has made it electronic, whether the state still has it as physical. If it is physical, we procure on behalf of the customer. And each stamp paper has an ID, which is the unique identifier for that stamp paper. So that is what we provide in a digital manner, along with the digital franking.
Acceptable mode in the legal format?
Yes, it is.
It enforceable?
Yes, it is acceptable and enforceable in the court of law.
Under which law? Under which act?
I shall get back to you on this. But
I'm a banker and keen on this, and that is why I asked this question to you.
Yes, Mr. Mohan, let me get back with my product team. It's under the corporate law, but I will get back to you with the details around this.
Okay.
And this is a work in progress product on our end.
Oh, it's a work in progress product. Okay.
Yes.
But I'll be definitely interested to know.
Absolutely. I'll connect with you post this.
Sure.
Yeah, thank you. Any other question?
No, thank you. Thank you, Saru. Yeah. So we now move to the next presentation, and it gives me pleasure to invite Mabel Chaco from Open. Mabel.
Good morning, everyone.
Hi, Mabel. Good to see you at the FICCI platform.
Good to see you too, and lovely to interact with so many women in fintech.
Great.
Just sharing my screen.
So you can.
Is it visible?
Yes, it is.
So good morning, everyone, and thanks a lot to FICCI for getting all of us together on a single platform. We do need a lot more of these because India, in many ways, is the right place to be a fintech entrepreneur. I say this from 13 years of being a fintech entrepreneur. Open being my fourth fintech startup. It was not always known as fintech when I started out. It was known as financial services 13 years back. And it's been a lovely journey here because we have a very inclusive ecosystem that keeps us going every single day. So thanks to FICCI, thanks to everyone in the ecosystem that makes this possible for all of us. Coming to Open, as I mentioned, Open is my fourth fintech startup. We started this in May of 2017, and we were the first to come up with a format of neobanking in India, specifically for the SMEs. Now, when you say neobanking, it means a couple of things. We are essentially a fintech that works with the banking layer for the regulatory license, compliance, and all of it. And we build a lot of tools that businesses can use to automate a lot of their business banking functions and ease their business finance functions in the process. So everything from creating a current account to using only a digital account to raising invoices to doing automated accounting, collecting payments, be it online, offline, or cash and bank account deposit. Keeping track of all of these and to generating standard bookkeeping reports like P&L, balance sheet in an almost 80% automated manner. These are and just tying that in along with the employee reimbursement, expense management modules, and cards for small businesses. That's all that Open has been able to build in the past three years of our existence. We are a Series B funded startup. Our lead investors are Tiger Global, B Next, 314 Capital, and Speed Invest. I'm going to take you through a couple of challenges that SMEs face in their day-to-day functioning. Most businesses have at least 2 or 3 current accounts. The ones who are looking to start out new and want to open a current account, they also register with Open as a platform. But otherwise, a typical business tends to use at least 2 current accounts to manage all their inward and outward payments. They work with a lot of disjointed accounting platforms that doesn't really sync with the bank account. Your bank account gives you UTR numbers, but your accounting software doesn't really understand that. It just understands who is the vendor and who is the employee to which the payment has to be going. There's a lot of manual cumbersome reconciliation problems. And a lot of this exists in the life of SMEs today because they are not able to, all these systems are not able to talk to each other. Now, when we started thinking about, trying to solve this problem in early 2017, one thing that was clear to me and my founders was that we have to start with the banking layer because that's where all the money is coming in and where all the money is going out. And hence we took this format of neo-banking in order to solve some of these challenges that SMEs face. So coming to Open as a platform, these are some of the things that Open does. The business current account is at the core of the platform, and we have integrated and built in a lot of tools that a small business owner can use to take care of his business finances. Everything that a business requires is able to be seen within the Open universe. And in doing so, we are able to reduce at least 3 to 4 hours of manual cumbersome work for the business owner. Taking a slightly deeper look into the platform, we help small businesses do their receivables in a proper way. Everything from raising invoices to integrating a payment gateway on their website or sending a payment link for collecting online payments. And every transaction that is coming in is auto reconciled to a certain income category, and thereby automating the bookkeeping process to a fairly large extent. We also help all this data to sync with third-party ERP softwares or accounting softwares like Tally. We also enable small businesses to collect cross-border payments using the Visa rails from bank transfer. So this is not just the or international payment gateway part, but this also simplifying the way bank transfers happen between US and India using the Visa rails. When it comes to payouts, simple thing as just doing vendor payouts or salary payouts is such a pain because whatever we get as slightly more evolved startups is not exactly what is available to the small businesses from the banking system. So simple thing as doing a simple Excel file upload is a big task for a small business, and a small business typically lands up spending a lot of time and money in order to get such functionalities from the bank. So we are democratizing that, and we have tied it along with aging analysis tools that can help them know what is their outstanding dues, and then a host of other payable tools to do vendor and salary payouts. We also enable this over APIs, which I would be mentioning in the coming slide. Because a lot of incoming payments and outgoing payments are tagged to the right categories at the time of the transaction happening, we are able to automate bookkeeping to a fairly large extent. I would say to an 80%, and it's only the cash payments that require any manual intervention from the platform. So Open, the platform itself, has a fully automated bookkeeping software that can help generate all kinds of bookkeeping reports, be it P&L, balance sheet, chart of accounts, see the aging analysis, general ledger, trial balances, and all of them. But at the same time, not everyone, like Tally is the go-to accounting platform for a major part of India, and it would be foolish for me to say that I want to replace Tally. I don't intend to replace that. I've just built an interface that is understandable for a dumb entrepreneur like me who doesn't know finance, I should be able to do it, and then my finance team or my chartered accountant, whoever is using Tally, should be able to say the same things happening on Tally, and that is what we do with the sync with third-party accounting platforms like Tally. When it comes to cards, we launched the first credit card for small businesses and startups called the Founder One card. We've also, enabled tied in a full-fledged expense management system along with the cards, enabling, expense management and reimbursements to happen seamlessly using the platform. There's no separate, loading of funds and things like that. Everything can just work with your current account. And in case your team doesn't require a physical card, certain things like online spends for Google, Shutterstock, AdWords, or one of these platforms, then you can just issue a virtual card to your team for doing the online expense management. And all of this syncs back into the accounting platform. And the universe would be incomplete without having a lot of native and third-party apps that we have built that help manage a business better. It's the entire idea of the App Store is to help the entrepreneur reclaim some part of his time to growing his business rather than just focusing on mundane tasks. So everything from employee corporate insurance for the teams to access to short-term loans with our NBFC partners to integrating with third-party accounting softwares or managing our ad spends. All of this come together in the App Store of Open. Yeah, and as I mentioned earlier, everything that's there on the platform is also available in the form of APIs. So be it creating virtual accounts for collecting. So if you're a school and you want to use multiple virtual accounts to reconcile all the fee payments coming in, or you're a ride-sharing startup that wants to do instant payouts to your driver partners, as soon as the ride is over, to an e-commerce startup who wants to do instant refunds without having the cumbersome way of refunding back to the source or asking the user to share the bank account details. These are some of the powerful things that our APIs are able to do. We power close to 650,000 businesses right now. We process roughly $15 billion in transactions on our platform, and we add roughly 45,000 new businesses on our platform every month. That makes us the fastest growing neobanking fintech in the world today. And these are some of the categories of businesses that use our platform. Everything from startups to transport companies to construction companies and real estates to shop owners, the offline retail, to manufacturing firms, to traders, as well as media companies and restaurants. So these are the top categories that have been using our platform today. That'll be all from my side. I'll be open for any questions.
Thanks. Thank you, Mabel. There are no questions here, but if any of the panelists would like to ask question.
We will only compliment.
Thank you.
Mabel, this is Sudhakar. I think this is a phenomenal story. Two things that I want to ask. What kind of partnerships do you have with banks? Which banks do you partner with? And will you be partnering with multiple banks? And what is the customer feedback to some of the pain points that you've addressed to them? What has been the customer feedback so far?
Sure. Happy to take that question, Sudhakarji. So typically, if I have to do this anywhere in the world, I just need one banking partner. And that's all that I require for building a new bank anywhere. But India is a different market. The size of the population, the number of banks that are there. It's always good to have the more the merrier. So today we have 18 banks as partners for various parts of the product. So some would be there for partners for the virtual account. Some would be partners for the card. We have Visa as a global partner for not just the cards but as well as for the cross-border payments rails. And so like that we have got 18 banks who are partners with us. Some of them for the current account, some of them for the cards. It's a bouquet of different services. Coming to the user feedback for this, we have seen phenomenal adoption. The very first beta version that we launched This was way back in December 2018. December 2017, the very first alpha version that we had launched. By May 2018, we already had 5,000 people who were using our platform, 5,000 businesses using our platform. And back then, we just had a very basic thing of virtual account, and then the ability to do payouts and bulk payouts. That was all that was there at that point of time. And thereon, we've seen good adoption. We've used our user feedback to build in all the other layers that you've seen today on the platform. And a lot of it comes from the customer feedback that we keep getting from our customers. Some of the things, the uptake has been really well. Many of my customers come back and tell us that they've been able to automate so much that they are at least able to get 3-4 hours to focus back into their business, into growing their business. And that for me is the biggest, for an entrepreneur to reclaim his time. That is what keeps us always going at Open.
Thank you so much. Thank you so much.
Okay, thank you. Thank you, Mabel. We will now move to the next presentation of the day. I now invite Priyanka Kanwar from Kite to make the presentation. Priyanka.
Hi, good morning, everyone.
Good morning.
Hi, are you able to see my screen?
Yes, it's visible.
Great. Very glad to be here. Thank you so much for the invite, and I'm very excited to especially be here along with the panel of amazing
Priyanka,
women.
sorry to interrupt. Can you just turn your video on, please?
I'm sorry, I actually mentioned that I'm not able to turn my video on because I'm on the road today.
All right, all right.
Yeah. But thanks again for having me. Like I said, when I was just first starting out, I started Kite right out of college. And when I was just starting then, I saw very few women in Fintech. And today it's just, so fantastic to see everyone here. And it clearly shows that, we're moving up, we're moving forward. So I'd like to, start the presentation by quickly introducing myself and my co-founder, Pratesh Bhatia. We are quite a young company as compared to all of the other presenters here. We're also fully bootstrapped, so a lot of what we built is one step at a time. And the way we started was that Pratesh and I go a long way back. We've been best friends since high school. We've ever since I can remember, we've been wanting to start a business together. Back in 2009, we came up with a plan to start an e-commerce company. At that time, we chose to do college over doing that. But then when I went on to Yale University in the US. I started a couple of nonprofits there, and Prateek, ended up founding a brewery as well as a craft beer brand, which has now become Simba from those college days. When we both came back, I think the one thing that was, that we saw, which was really exciting, was the fact that both of us were very passionate about financial services because the sheer magnitude and diversity of the problems, that had to be solved for, and even today continue to need solutions too. But at that time, I think the Reserve Bank of India had just started to open up regulations. So you saw that, companies like us suddenly had doors open. We could meaningfully actually contribute to the financial ecosystem. We decided to focus particularly on wholesale banking because, like, Mabel and Saru and the other presenters also, I think, will focus on, is that we saw that there was very little innovation, at least coming from banks in terms of wholesale banking, even the accounts that we were using for our businesses. And this is not only SMBs, right? I'm even talking about the mid-market and large corporates who are supposed to be overserved in the country, right? Who are supposed to have access to literally everything. I think even for those kind of corporates, and today also when I talk to my clients, we work with Fortune 500 companies as well as startups. Even when today we work, talk to our clients, they continue to tell us that there's a lot of interesting problems they face, right? So on the one hand, you have something like a 20 crore credit line, but from several banks in India today, you're not able to get a corporate credit card very easily, just because not all banks offer that kind of product. The second thing is that banks corporates don't always want a plain vanilla card, right? Today the way that needs of mid market, large corporates as well as SMBs are evolving, as some of the panelists have mentioned, is that they want smart controls, right? They want data, they want access to a dashboard where they can control things. They want to be able to access APIs. They want to be able to incorporate them into their product flows. And that's something that both Pratesh and I noticed, while working with banks, that they were not able to, do very well, barring I think the top few banks in India, which have done exceedingly well. Of course, banks like HDFC, SBI, Axis, Yes Bank, those are sort of the early movers in the API platform economy. But I think most of the other banks, even today, some of the banking partners that we are working with, that we are going to launch with in near future, uh, I think the issue that they have also been facing is that despite the fact that they've had very large deposit bases, they've had access to clients all across the country. They've got 100 million plus client bases. They've got a branch in every single zip code in India. Uh, I think the issue is that because of their traditional focus on the core businesses, right, such as credit lines, CASA, they haven't really been able to push the non-core side of banking, things like prepaid cards, credit cards, digital banking. The second thing is that, of course, just by just looking at the kind of technology, the kind of product that a lot of banks in India today possess, I think most of their time, most of the workforce sort of ends up just focusing on maintaining legacy systems, right? And even in terms of policies, I think all of us within banks, outside of banks, we've seen this, that even a single sort of banking policy just takes a few months to be implemented. So I think that's where companies like Kite really come in, where we said that, hey, there's clearly a gap where companies want these solutions, banks want to give their clients these solutions, they want to bring new clientele through these solutions, but there needs to be a layer on top of the legacy banking systems that can actually bring together some of these pieces in a modular fashion, right? And that's exactly what Mabel and Saru spoke about, and I think we do also a part of that. So just in terms of again focusing on what Kite does, we're a B2B fintech platform. We simplify issuance of payment instruments for businesses, be it prepaid cards, credit cards, as well as UPI and EFT, helping them all the way from the transaction processing to the delivery on the user interface. We partnered with a select number of banks and with NBFCs. We have our own NBFC license as well, which we bring to the table, and with card networks like NPCI, Visa. And we issue these scalable financial services like prepaid cards, credit cards, and loans. We've also combined this offering with our proprietary SaaS suite and API platform, which I'll just describe to you, that enables the automation of the entire accounts payable process. So any kind of money outflow that you can think of, right, whether it's expenses or travel, vendor payments, payroll, lending, gifting, we basically help them automate that entire piece through these two models. So just speaking about the two models that we have, one is like a ready-to-use SaaS suite, right? Because like Mabel said, what you would notice with companies in India is that not all of them can, of course, work with APIs. They also need these ready-to-use dashboards. And maybe unlike some of these legacy solutions like Concur, what they want is essentially something that's configurable, that they can get going with, like, within a day. So we've seen, along with expense management, we do things like, vendor payments, reconciliation, invoice management, corporate gifting. So we've tried to make the platform flexible in a way that, any accounts payable team can basically manage all of those functions from one dashboard. There are some very, very interesting, problem statements that came to us, and the way that the system is designed is that, the prepaid cards, the credit cards, all of them are linked. They are so tightly sort of coupled with, the expense management or the vendor payments dashboard, that companies are able to see all the real-time data as it happens, right? So because we get the last leg of the authorization, we've created our own rules engine, right? And what's interesting over here is, for instance, that let's say that logistics company wants to give out cards to the truck drivers. Now they want to control every part of the transaction, and they want to say that this card only works at fuel stations. So companies are able to in real time control the MCC code right from the dashboard, right? Let's say another company told us that we don't want our cards to work between 12 a.m. and 8 a.m. So those are the kind of things that they can control. So literally every part of the transaction that the card network allows you to control is something that you can configure in real time on the card dashboard. Whether at a card level or at a company level. Then we've got all the other features, that companies typically need, right from a startup to a large corporate. There are intricate, ways to configure approval workflows, hierarchies, right from L1 through LX. Companies can configure projects, teams, cost centers, right? Companies can create their own reports and categories, because in India, we know how picky, the finance teams tend to be in terms of the kind of details and data that they need to collect from their employees, right, on the ground. There are also features where there's OCR. So OCR technology, of course, allows for automated reading of the receipts, right? Either physical receipt or directly from the email through an extension. So that really automates a lot of the typical Excel sheets, or even like complex sort of legacy systems that a lot of the corporates in India previously had been using. There's an automation of GST reports, which means basically that in order for you to get input credit, which a lot of businesses in India don't end up taking advantage of, again, because of the lack of data, or because of the lack of automation, the software automatically picks up, the transactions that are eligible for input credit, and it smartly groups them in terms of for that particular industry, for that company, which of these transactions are actually, applicable in terms of the input credit, and files them in that appropriate format and ships it off. Then we've got all sorts of integrations, which companies need today, whether it's accounting, ERP. We've done some very interesting integrations around the CRM, around their own banking accounts. So there's a lot of interesting sort of, there's an ecosystem coming together based on what our clients ask for. Um, there's a travel desk, for instance, which basically allows companies to book flights, hotels, everything right from the dashboard. We've got partnerships with airlines. We've got partnerships with hotels. We offer these discounts back to the corporates, so that makes it very easy for them to sort of manage that entire workflow through that one dashboard. So that's one piece of it, which is the SaaS solution ready to use. I think companies can get started within a couple of hours. And the reason that we decided to do multiple types of cards, so we do within prepaid we do things like GPR and gift. Within credit, we're doing secured, unsecured. We're also doing forex cards. The reason that we decided to do this is because at a typical corporate, particularly in India, you'll see that right from the top level towards the mid management, the junior levels, the need is very different, right? So for the CXO level, you need something like a credit card, which is like a corporate liability, right? And then as you go down, you'll want to give your truck drivers, you want to give your sales staff a prepaid card, so that the platform basically allows for all of those use cases. The other thing that we've been doing recently, which has been very successful and very interesting, again, is the bespoke API platform. So what this does is that this brings together um, all of the card management API suite we've got. We've just ventured into digital banking APIs as well, and our own white labeled expense management solutions, our white labeled user apps, and our NBFC license. It plugs and plays all of these things to basically allow companies to come up with very custom and interesting programs, right? One of the programs, for instance, we worked with a tech platform on was that for the gig economy workers that they cater to, right, their drivers, their delivery partners, etc., they can't very easily access credit cards from a bank. So we brought in our NBFC over here, and we started to do a loan on prepaid card program where they plugged in our APIs into their product suite, and we are now able to issue these loan on cards very easily to these gig economy workers. And not only do they get access to credit to begin with for their tasks that they have to do on the ground as micro entrepreneurs, but slowly, as you get more and more data on them, we are also able to push personal loans. We are able to couple it with insurance. We are able to couple it with offers which typically you don't see on these card kind of platforms, right? We've got some very other interesting use cases that we've also been working on. There are insurance companies that want to do payout programs for their agents, and they also end up using our API suite to sort of configure that into their existing product flow. We recently had a very interesting client also coming from the US who happens to be a large baseball team. They wanted to launch a card, for their fans to improve loyalty and stickiness. So there's, n number of use cases, right from education to healthcare to even sports, insurance. And that's the reason that, like the panelists on this event sort of, emphasized repeatedly probably, is that there is such a strong need now to bring together these different pieces and able to make it modular, that it becomes like an entire plug and play game for them, and they're able to launch these programs in less than 2 weeks. So that's part of the bespoke API platform. And just in terms of how the market is shaping up and Kite's role in it, some of the key insights that we see is that this really is the AWS phase for fintechs, and what that means, of course, is that much like what AWS did, for cloud storage back in 2005, 2007, is what today companies like Open, companies like M2P, companies like Plaid are doing, right? Which is that we are all bringing together, this infrastructure, which becomes so easy for companies to use that they can get started immediately. They don't need to spend months, working with banks to get their partnership going. They don't need to spend, that much investment capex to sort of get their own tech systems, in-house tech systems running. They can just plug and play into our systems and our expertise and not have to deal with that part of, what may not be their core business. The second is that it's going to unlock a lot of new distribution channels. Like A16Z has said that every company will basically be a fintech company, right? And so you see companies like Uber and Lyft sort of, leverage their distribution bases of 300, 400,000 drivers of their entire customer base and, just launch these very innovative new financial products within their own suite. And the third key insight I think that we believe in is that it's not going to be a winner takes all market. There's going to be a significant opportunity for unbundling. So even within the entire payments flow, you'll see, right from the user interface to fraud and security and compliance management to payment processing to the actual issuance license, right? I think all of these things are slowly being unbundled, and there are companies which are increasingly specializing in one or more of these areas, right? Just in terms of what we will be doing next is that in the upcoming year, we are going to be rolling out more partnerships with banks that we see are very relevant to the kind of strategy and the kind of ecosystem that we're focusing on. We've already processed about $300 million of transactions. We're moving towards $1 billion in the upcoming year. There are going to be new tech innovations. We're coming up with a new platform which is going to be very flexible and will again make it very easy for any company to sort of issue any kind of card program on the go. And we will be looking at new geographies as well. Other than India, we're also going to be focusing on some emerging markets. We see that Southeast Asia, Middle East, tend to be very interesting, and we're looking at those very closely. And overall, I think, like I said, the reason we're so excited about the upcoming sort of decade, right, is because the last few years we've just been focusing on building all of this infrastructure, and now is when we'll see all of it sort of coming alive in terms of these new use cases and new fintech ventures sort of being powered. So that was a little bit from me. Thank you so much. I'd love to take questions.
Thank you, Priyanka. May I request Sudhakar ji or Tangsala ji to please ask questions if you have any?
I would like to know from Priyanka. I think she made an opening remark that you support the wholesale banking.
Right.
So in wholesale banking, are you also going to support the trade finance products?
Sorry, I couldn't catch the last part.
Are you also going to support the trade finance products like the letter of credits, the bank guarantees, and all those stuff?
So yes, definitely, that's something that we're moving towards. And as these pieces, keep getting built, the one thing that we're seeing is that there's a lot of data coming in from the platform, right? Just in terms of how companies are using the platform, how all of this data is being recorded, and just the sheer distribution, right, and the access that we've got to the dashboard. So what we are definitely planning on doing is that we're going to be moving towards wider ecosystem where whether it is trade financing or there are other forms of credit that SMBs and mid markets need. That is going to be coming not only from our own NBFC, but also from our partners. So that's already beginning to happen, and I think we'll see a bigger focus on that in the upcoming 12 to 18 months.
And as I understand, your client base will be the mid to large corporates. So, how do they accept your technology as a complement to their existing technology or as a substitution to their product technology, what they're using?
So, interestingly, again, what we've seen is that when they begin to work with us, they see us for one particular use case. Let's say a company starts using us for expense management, and they've got some other solutions for things like vendor payments or gifting. And when they realize that the flow is so seamless, when they start working with us, I think their use cases, the need for the platform sort of keeps increasing as well. So even when we started with only expense, but after that, because of the kind of demand that we started seeing, the kind of problem statements we started seeing, I think what we're realizing is that companies want to move towards a unified platform. They don't like to deal with too many different vendors or too many different dashboards.
You're right.
Sorry.
You're right. That's why I asked this question, because companies don't really like the many platforms to interact. They would like to have. Okay. Okay. Good. Thank you.
Right. Thank you.
Thanks, Priyanka. We now move to the next presentation of the day. May I invite Meghna Surya Kumar from CrediWatch. Over to you, Meghna.
Hi. Let me just share my screen.
Yeah.
Can you see my screen?
Yes, it is visible.
Great. Good morning, everybody. My name is Meghna Suryakumar. I'm the founder and CEO of CreditWatch. CreditWatch is an AI-based platform, and we amplify trade velocity. So what we do is we provide actionable insights and we provide infrastructure, APIs, and flexible workflows for seamless credit management and faster lending decisions. We work with the leading financial institutions, Fintechs, and other platforms in the industry to help them in the entire life cycle of their credit management. We started 2016. At that point, CreditWatch started by just providing APIs to banks. So everybody's talking about APIs today, right? So CreditWatch was the first fintech to provide an API to a bank so that they could do small business credit, and that was with RBL Bank and also with an NBFC called Capital Float, which is a very large fintech today. They were one of our first customers, right? And we started our journey by providing limited APIs to help enable digital lending. And these APIs were around helping the banks and fintechs understand their customer and help build a thicker digital file about them. Because the main problem that we wanted to solve was in India, when we see that there are 63 million SMEs that they are here today. If you look at the statistics in the Reserve Bank of India, only 15% of them have access to formal credit, and in that 99% of them have access to credit against an asset or mortgage, right? We have very little to small businesses. We also saw that these small businesses, even if they were getting credit, it was at phenomenally high interest rates, 16 to 24%, whereas a large company would probably get credit at 8 to 9%, or sometimes even less than that. So this is the problem that we wanted to solve for our customers and our partners and the different financial institutions that we work with. We also saw that credit and trade were really interlinked with each other, right? Because you need credit at a point when you're executing a trade. And everybody is either looking at credit or they're looking at trade as two separate, distinct problems to solve. We felt that they were more or less essentially the same problem to solve. That is the reason why our mission statement and our vision is to amplify trade velocity. So not only did we start looking at providing solutions to our partners, which are the fintechs and the financial institutions, but we also started looking at how we could offer the same kind of optimization to solve for trade. Because we have over $2 trillion worth of trade that happens every year, especially with small businesses. And we lose about $100 billion each year because of losses, because of fraud, because of lack of trust, and a lot of other inefficiencies, right? So we have underbanked SMEs on one hand, and we have trade, which has a lot of, friction costs because the system's broken and there's a trust deficit. So we decided we'd build a solution to solve for this, right? And what did we do? When we started in 2016, we didn't have APIs, we didn't have a lot of infrastructure, and we didn't have a lot of technology, and which colleagues like from Verified Digital, all of them are building. All of that was not available when we started out in 2016. So CreditWatch essentially built an AI fintech stack from the bottom up, and right from the base infrastructure, where we wrote the basic protocols of how you would exchange data in the economy. Because if you have to do risk management, understand your customer, do KYC, whether you need to give a loan, build out a credit report, or even understand early warning signals, there needs to be exchange of data between the customer, between the bank, and maybe the technology provider who's supporting all of the entire ecosystem. So CreditWatch built the data protocol, which is equivalent to the SWIFT protocol for exchange of data. We're actually going to be open sourcing it, and it'll be called India Protocol, so that other fintechs can actually build more solutions using this to and build more advanced risk solutions, and it can be more widely adopted. And next, we built a set of APIs for KYC. Doing KYC on businesses actually is quite challenging, right? Because we've seen so much of innovation in many companies that presented today in KYC. When you look at Aadhaar, when you look at PAN, and all of these basic government documentations, the DigiLocker, the APIs, and all of that. But when you actually have to do due diligence on a business, right? And let's say you have to offer it a loan, which is a 1 crore or 2 crore or 5 crore, 10 crore. Just the basic KYC in the beginning is not enough. Banks actually have to go beyond that and almost do some sort of a mini credit assessment at the point of KYC. So CreditWatch is the first platform that has actually provided these kind of solutions to our partners. So, in terms of just a quick snapshot, in terms of what we're doing, right? We want to build digital trust that amplifies trade velocity, that enables trade, that enables credit. We've built the building blocks for using data, insights, and technology. So the entire CreditWatch stack, if any bank wants to start a digital neobank in a matter of 90 days, just come to CreditWatch. You will have the entire stack to do, wholesale lending. Right, we've built the data exchange protocols for the entire ecosystem, right? And we use ML AI, and we are the first fintech again to use the concept of explainable AI, because for, let's say, for bankers, it's so tough to work with black box AI models. So we built in the concept of explainable AI, especially with our risk and credit products, so that the bankers who are very experienced can also intervene and be able to take better decisions. CreditWatch has introduced a unique trust score which with a lot of deep insights and early warning signals. This is equivalent to a CIBIL score for businesses, just like you would have a CIBIL score for individual. CreditWatch Trust Score is a CIBIL score for business. We've partnered with a leading machine learning institute and worked on it for the past over a year, and we've done experiments with over 5,000 to 6,000 companies and back tested before we release the score. The version 1.1 is releasing on November 1st in a couple of weeks. Right. We also have a credit origination and management platform. We're backed by leading Silicon Valley investors, Artis Ventures, that has funded the likes of YouTube and has funded Palantir, which is doing one of the largest data company IPOs today. They've just filed that they'll be doing an IPO in the next 12 to 18 months. Artis has backed these kind of large data ventures, and we are the first investment outside the United States in the entire history. So, in terms of our team, CreditWatch has a very strong team. Apart from me, my co-founder Sandeep, who also is my husband, he has got over 1.5 decades of experience in with global technology companies, where he worked on a lot of very relevant technology over a decade ago, which led to real-time decisioning with the stock exchanges in the US. And we, based on that experience, we built some of our real-time decisioning systems in India today. We also have Ganpati, who was in the founding team of Sharekhan, and he also, was in leading positions as a banker in Kotak Mahindra, Citibank, and brings over 20 years of banking experience to the table. And Hemant, who's worked with companies like Amazon, and he's also been a founder of a fintech that went up to Series B, and he heads up product. And Rohan is an award-winning designer. Some of his work, earlier awards. So as I told you, right, that there's 6 to 10% of friction cost of doing business, right? There's a $2 trillion credit debt financing gap, and then there's a $100 billion loss because of friction, right? So there's a lot of optimization you could do. You could save 6 to 10% of friction costs while doing business. This would actually really make a big difference for businesses and banks themselves, right? If you just look at, in credit itself, if banks, they grapple with a lot of problems. There's a cost of acquisition of borrowers, right? There's a lack of trustworthy data to price risk, the high operational costs and rate of interest, and it's very difficult to do timely collections, right? At the same time, even if you look at trade, there's a difficulty in building trust among bank partners, suppliers, and customers. Right, and because of this, we have these gaps. If you look at the entire universe of entities in India, only 50,000 entities are rated by credit rating agencies, right? And the entire credit base of of all entities in India who've got credit till today, including small and large, is just 17 million entities. Whereas we have over 65 million small businesses and 1.5 million larger businesses in India. And if you look at the total amount of companies that have actually a formal credit rating, it's only 4%. 96% of them don't have a credit rating. They don't have an equivalent of a CIBIL score. And that's the crux of the problem. Even if you look at the total debt that's outstanding, 80% of the debt is not even rated. That's the reason why they're getting such high interest rates, because there's no credible third party, that is able to tell you that, you could offer better credit rates and help you price a risk. Even if you look at the entire universe of companies and businesses that have GST and registrations, right? Out of the 63 million SMEs, only 12 million have a GST and registration, which means that they would have revenues over 40 lakhs, right? So that's the scenario that we're dealing with, which is why we have so much of friction cost. So CreditWatch is building blocks for digital trust. With our infrastructure, the credit rails that we've built, the insights and the basic credit reports, the different kinds of information, the KYC, with private data, public data, consent data, and the intelligence, our trust score and our early warning system. We are helping banks get a full stack lending solution for wholesale credit. Right. And not only are we working with banks, but we're also working with fintechs. Many platforms that do supply chain financing, trade platforms, not just Indian, but international, which are coming to India. Some of the largest platforms in the world trust CreditWatch to be their trusted partner. Right. And even with a lot of fintechs, whether it's the capital floats of the world or whether it's CredX, or whether it's RXile, trade platforms, we work with different kinds of institutions. We are, in fact, work with almost every kind of fintech model that exists today. Why would everyone want to work with CreditWatch? Why are we the trusted partners for almost everybody in the ecosystem? This is because we can help you reduce costs and increase your margin, which is one of the hardest things to do in SME credit because of the kind of risks that exist and even the costs and the losses that exist. And CreditWatch can actually help you get a better margin of almost 400 bips if you work with us. If you want to deep dive into trade and credit, right? If we look at the trade environment, CreditWatch calls it the data dark environment, a business environment without trust. If there's no trust, especially in today's context when you can't even meet each other, right? Then fewer businesses work together, fewer even get access to capital, and there's limited trade velocity. But if there's a trust-driven ecosystem, right, where everybody is able to trust everyone because you have access to the right information about your partner, then there's a strong network among businesses, there's better access to capital, and then we see the amplification of trade velocity. And this is our vision and this is our mission. What is our business model? We provide something called digital trust as a service, right? So we have multiple products, right? From EWS and our tech enabler products, that is our digital onboarding, our credit assessment, our early warning system, our data as a service systems. Not only do banks use CreditWatch, even SMEs and corporates themselves use CreditWatch to analyze their vendors, right? And in fact, we recently just tied up with a Korean trade promotion agency who uses CreditWatch when any Korean business now wants to do business with an Indian business. So not only are we amplifying trade velocity within India, but our mission is also to ensure that Indian businesses are able to do business with partners worldwide. The CreditWatch Trust Score. This can be used in the context of credit. This can be used in the context of getting onboarded, right? If you want to get onboarded to any large enterprise, international enterprise, the CreditWatch Trust Score is going to become the asset that a small business would have, with which they would be able to get into trade relationships that they could not before, because we would enable, and we would be able to present them in a way that the partners understand the true capabilities. And now we have the loan matchmaking system. CreditWatch is now tied up with marketplaces because we're bringing credit to the home of the SME, right? We're bringing credit to where the SME is. You don't have to go to the bank anymore. And we're working through the OCEN, we're working with marketplaces, we're working with the banks as a technology service provider, and they will be using our loan matching algorithm to identify the best suited SME to work with in a marketplace where there are millions of SMEs who are looking for a loan. So in the entire credit ecosystem, especially now with the open credit enablement system, CreditWatch can provide services to over 50% of the participants in the entire ecosystem with our rails, our technology, our infrastructure, and our analytics. Why are we different? We're different because we work on both digitization and digitalization. We are open ready. We have a lot of open APIs. We have, singularity of insights, which means that if there's a business X across 2,500 sources of information across the internet and across the bank and across the entire ecosystem, we can collate all of that and singularize it under one common business entity. And that's the core of the intellectual property that we've created. Some of our key growth metrics, CreditWatch has grown really strong during the pandemic. In the past 6 months, we've increased our client base by 80%. We have 20 plus enterprise customers. We onboarded our first customer who's paid us over $1.5 million in terms of contract value. And I know that this is one of the highest in terms of the fintech of our size. We really wanted to prove that you can do B2B SaaS and you can win multi-million-dollar deals. And this year we've been able to do that. And we've provided insights to over $10 billion worth of loan portfolios for partners and banks. That's over, close to over 1 lakh crore. In loan portfolio size. And also in terms of our product in the last 6 months, right? We are able to process 10,000 requests per minute. And that's one of the highest in the industry. We've done over 60,000 credit reports till date. And, there's been over 20% growth, during the pandemic. The total number of parties we're monitoring in our early warning system is increased by 100%. In fact, we're the largest enterprise solution in terms of the total amount of credit being monitored in the market today. And in terms of the total number of parties we're monitoring for our early warning system, there's been a 35% increase. So these are some of the customers that we work with. We work with PSUs, we work with Fintechs, we work with everybody. And this is some of the traction that the company has got, been recognized by the fintech industry. In fact, we won the recent fintech pickup for the AI category. I just wanted to show you a small demo. I wanted to invite all of the companies and the bankers here today to try out our new solution. So now we have the OCEN, and you are able to now lend using just the GST in under 4 minutes. So this is CreditWatch's version of the Sahay GST and what would be for the Sahay Gem, where you can digitally onboard and create a loan product and disperse money in under 4 minutes. So this is, we use a bot called Maya, which is our AI assistant, who can speak in many languages and just have a conversation with a small business and, fetch most of the information from the public domain and actually, reduce the entire cumbersome, process that's involved in filling a loan form and doing KYC, because all of it is combined and done at one shot. So we created a loan and we were able to do video KYC in under 2 minutes. So we have e-sign, we create the entire digital cam, and this is what happens at the lender, in under 2 minutes. At the same time, the file comes up. So we provide the technology not only to at the customer facing end, but also to the lender, who can just quickly process all of this, and we can even automate the decisioning for loans under 1 crore. So this is our scorecard. This is for a larger company. This is a KYC report. And also, we create instant scores on the borrowers. So all the companies you're onboarded, you'll be able to also instantly see if there's any risk about them. We recently released a COVID impact score. So whether it's a proprietorship or partnership, any company that you're lending to, you would be able to immediately know what's the impact of COVID on the particular business at the time you make a lending decision. Thank you.
Thanks, Meghna, for a very comprehensive presentation. Any questions, Sudhakarji, Tangsalaji?
Yeah, Meghna, hi. Good to see you again.
Yes,
Tangsalaji, go ahead now. I'll ask later. Go ahead.
I just wanted to say we were part of the jury to select them as an award winner. So nothing more.
Yeah. So Meghna is also, kind of actively engaging with us in some of the work in the FinTech committee. So Meghna, this is good to see the OCEN linkage with the EWS system.
Yes.
But the difference that I see is EWS works with large and mid corporates, whereas Oken is kind of for the SMEs, MSMEs, and even individual borrowers. So how have you been able to align your EWS to work within the Oken, and how has been the response, and what do you see as analytics coming out of this? Is it adding value to the Oken system, and how so?
Sure. So in terms of the EWS, yeah, while the video shows a larger entity, we've also very well for smaller SMEs as well. So we've been live in over a year and a half, both at Karur Vaishya Bank and at Aditya Birla Finance, where, especially at Karur Vaishya, 60% of the portfolio is actually SMEs, right? And 40% are larger companies. Similarly, even Aditya Birla Finance has a huge, set of SMEs that they bank with. Now we have a recent relationship now with IndusInd Bank, where a large portion of the small businesses, the part of their loan portfolio, right? At least I think probably 40% to 50%. So with respect to providing early warning signals on small businesses, we use, because we've enabled the entire consent layer, we've automated the flow for collecting data points like GST and etc. And most of our banking and NBFC partners are putting that in the mandate when they sign up for a loan with the borrower, that they need to share information on a quarterly basis or a monthly basis, including stock statements and other kind of financial statements that small businesses are able to provide banks. We have OCR technology. So with the combination of our OCR technology, ability to read financial statements, consume GST data, and consume other kinds of, do bank statement analysis, and do these kinds of analysis on private data, which we would get because we're providing these services to the bank. So it's an installation in the bank, so the data is not leaving the bank, but a technology is able to automatically create risk insights. We've actually been able to provide very, very meaningful insights on small businesses. And this is what we would be offering for the SMEs in the Oken system.
Okay, thanks much, Meghna. Thanks much.
Thank you, Meghna.
Thank you, everybody. Thanks for the opportunity and great presentations by everyone.
Okay, may I now invite Pallavi Srivastava from PropCap?
Hi, good afternoon, everyone. I'll just try to share my screen. Is my screen visible to everyone?
Yes, Pallavi, it is.
Great. Hi. Thank you so much, Supriya and the entire FICCI team for giving us this opportunity. It's been very, very inspiring to hear from everyone and all the exciting products and the journeys all the fellow entrepreneurs are on. I would start with giving a quick background about what we do as a company and myself. So, I am one of the co-founders at PropCap, along with Himanshu Chandra, who used to be with Standard Chartered Bank. My background is that I used to work with World Bank and IFC for almost 5 years before actually starting up PropCap. The idea with which we started was very simple, that we wanted to work with the brands. This is the experience that we brought in, and really see, how we can address the massive, financing gap in terms of the last mile suppliers and retailers. So when we started, the idea was to actually look at both the sides of the supply chain and see how the corporates controls as they reduce when we go to the last mile channel, which is not the tier 1 suppliers or tier 1 buyers. We can still find a way to lend to these customers. And that was the genesis and the idea, going forward as we have progressed. I'm sorry, I'm not able to change the slides just one minute. So I'll give you a flavor of a typical customer we work with, right? And we are essentially right now focusing on the retailer segment. So this is a retailer, Sangam Electronics, based in tier 3 town in Rajasthan. The shop has been over 17 years old. Proprietor turnover of around 1 crore. If you look at the shop and the footfall and the kind of market where he's located, with all the logos in front of the shop, it seems very clear that he should have pretty much very good access to credit. But the news is that despite being in business for so long, credit has been a challenge for him. And he has, when we onboarded him, he had a CIBIL of -1. That means he had no credit footprint. So he is currently procuring from 7 large brands in India. And when he buys, he doesn't buy directly from the brand. There's always a distributor in between. So that's a typical structure. And so there are about 15 million such retailers. We know the retail consumption space, it's almost crossing $1 trillion in sale. 90% of these customers are still unorganized small retailers. And if we look at the financing gap overall for this channel, which is the last mile retailers finance, it's about $60 billion. And if you look at if you go deeper and go to any of these shops, I'm sure most of us would have visited a shop like this, maybe not in white goods, but maybe a mobile shop or FMCG kirana store, or a two-wheeler shop. These are the industries that we are in. And you will find that for all these shops are having at least one branded products, right? So it's always selling some kind of a brand products, and then maybe it's one, it's more, but most of the sale is coming from some of the branded shops, branded products. So there are about we have mapped about 100 top brands in India, which are actually penetrating and reaching out to 90% of this retailer ecosystem. These are an indicative list of brands that we already work with, but there's a list of 100 or 120 brands that we are focusing on, which are actually our target market segment. Now these brands, how do they sell to these, and how do they really reach this channel is by multi-layered structure. A is of course the online channel via e-commerce companies, which is a smaller portion, sub 5%. Then there is modern trade, but 80% or more than 80% of the sale is still done through the general trade, right, which is the distributors and retailers. So it's a fairly large market. Now, when we go deeper into this segment, and since we started as a lending company, and the gap that we identified is this whole financing gap, where there is a massive need for formal sector financing. And what's been happening traditionally is that there has been the brand and the distributor have been given some kind of an informal credit to the retailers. That is a credit that we are trying to, and it's neither sufficient nor really serving the need for the brands nor the retailers. So we are formalizing that, but at the same time, when we went deeper and we started giving products and onboarding the supply chain onto our platform, we found a lot of other lateral demand coming, which was, while the brands do have access to finance as well as access to banking as well as world-class technology, right? Us as consumers also have access to mobile apps technology, as well as if we want to buy, we have consumer financing available to buy a large ticket value item. But when we go to this segment, which is the distributor and retailer, it's still extremely informal. There is a need for banking and digitization services. There is a need to formalize this channel. And all of the work, right from collections to day-to-day, business dealings, order placement, invoice tracking, reconciliation. These are all massive challenges. So what we are effectively doing is we're solving for this ecosystem by providing them not only with credit, but also a lot of other products. We have already launched a few of them and seen very good uptake. We started with credit, but now we are giving them payment solutions, current accounts through our banking partners, as well as analytics. We are giving them essential products for on the mobile app to enhance their sales team's productivity, and then accounting and reconciliation products, which we are well in the process of building. On the retailer side, there is a need for order placement, order tracking and management, invoicing, basic GST filing. So there is a huge amount of formalization that is possible in a huge market, which is what we are trying to solve. And therefore, our vision is to be the largest platform for all of these distributor retailer transactions. Like I said, lending has been our first offering. We onboard these brands and the entire ecosystem onto our platform. The brands share with us the data, so which is what allows us to be able to underwrite these customers. Our credit algorithm looks at two or more years of historical transaction data, sometimes even as old as 10 to 15 years old of data that comes to our platform, which allows us to understand these customers very well. It shows us how the customer has been behaving on this informal credit which the brands are giving. So while we don't get, these are thin file customers, don't have credit bureau record, but the data that we get is extremely rich and valuable, which we directly get from the brand's ERPs. So we have built universal adapters that dive into the ERPs of the brands and distributors and pull this data. And using that, we are able to underwrite these customers. Now, when we do this, a lot of this data is coming onto our platform. We are offering mobile app and products to all our customers who are maybe not yet lending customers for us, but they're using our payments products, they're using our software solutions. So that is allowing us to create a large ecosystem. The interesting thing is why we feel we are very well suited to really address this need and demand is because of our presence right with the brands. We have onboarded 35 of these brands already, allowing us a huge access to data. But apart from data, the brands also allow us the reach, right? So it's just not the tie-up that we have, but we ride onto their infrastructure. And more importantly, the controls, right? Because this is a very informal segment that we are working with. So brands allow us the structures, the risk mitigation tools to be able to monitor, the credit and other products that we are really offering. So this is what, in a nutshell, we are doing in terms of the lending side. We have like I said, the ERP data that comes to our platform. This data tells us about purchases of the brand products, how frequently the customer is buying or repaying. So all of the data comes to our platform. Basis that we are in terms of service delivery, the brands have the portal. So basically, why do the brands love to partner with us? Is because of not only the fact that we are providing, they're solving for their working capital need, but also the fact that right now they don't have the visibility till the last mile channel really, so they don't have an understanding of which product is selling at the shop, right? So they may be all they have been concerned so far is about the primary sale, which is to the distributor, but when it comes to retailer, there is a complete black box. So by when we come into picture, we are able to showcase give them the analytics till the last mile as to how the retailers are now behaving in terms of which products are selling faster, which are slow moving stock. Secondly, we also are able to give them insights on, this basically support their seasonality cycle, right? So we're giving them some kind of a process which we have built, which is very, very nuanced technology product for us, where we're able to reduce the rotation cycle for a retailer. So the way our lending product works is not a pure play lending, but it's more like a payments product with an incentive that brands directly offer, which allows the retailers to pay much faster now. So somebody who used to take 60 days, 75 days to pay earlier, the cycle now comes down to 45 days. So which allows the brands and the distributors to do an extra rotation in the year. And that is what is a very, very important proposition that we offer to the brands. They're able to access that right from their workstations on our portal. The distributors have an app through which they're able to monitor, they're able to onboard customers for us. They're able to place orders, send payment reminders, collect payments through the app. The retailers, of course, everything happens via the app. So if they're a lending customer, they need to have the app, but otherwise also because our data is syncing. So just a very basic thing of having the visibility on the ERP or the ledger, just for reconciliation purposes, is a very, very valuable thing for the retailers. So we are introducing a lot more other products between this distributor retailer leg and basically, driven completely by the brand's infrastructure. So this is in a nutshell in terms of technology what we are doing. In terms of the team, we have people, like I said, we are working at the cusp of technology, commerce as well as banking. So we have leadership team comprising of people coming from banking, right from actually the brands whose products we are actually servicing, as well as technology leaders. So far, we have, like I said, we have done about 35 corporates we've onboarded, allowing us access to 200,000 plus retailers whose data is syncing daily. So we have visibility into $1 billion of transactions value that is flowing into our platform on a regular basis. Then in terms of our lending journey, we have done about 400 crores of financing so far, working with 4 key lending partners. And in terms of post-COVID, we have been growing. We have grown to 5x of what we were pre-COVID levels. Our portfolio quality is something that I would like to highlight. The entire portfolio and the lending that we do is completely guaranteed. But otherwise, also the way we have been underwriting customers, we have had 0 losses post-COVID. We've been able to recover everything that we had actually disbursed pre-COVID as of 28th March. So that's where we are in terms of our PAR 60. We should be around 0.4, 0.5%. Network growth, with 35 brands giving us access to 500 plus distributors $8,000 million of sale that is routing through us, and this is the overall growth in terms of the number of customers that are increasing and actually multiplying exponentially day by day as we expand more. In terms of monthly disbursals, we were growing from Jan to March quarter 3x, and post-COVID we started disbursing back in June, and we are now at from June to September. After seeing a complete stoppage to the entire disbursal process, we are now at 5x growth. In terms of our AUM, again, we are at 5x the number of what we were disbursing in June. Asset quality, I've already spoken about. We had 100% of our customers were paying only one non-paying customer during the COVID period, which is where we had to actually use the anchor guarantees. But the way the product works, it's a short-term revolving credit. So the brands and the distributors really support in terms of ensuring that the customers pay so that the stock, the supply can be restarted, and therefore they all are kind of involved into the process of ensuring that there are no severe overdues and losses in the portfolio. And so this was all about what we're doing. Something very interesting apart from what we're doing on the lending side. And the software side of the business, we are now also working with TransUnion Sybil, where Sybil has looked at this data and they have developed a liking to it. And we are, as we speak, for a lot of customers who are thin file customers, don't have credit bureau record. We are working with Sybil to see how perhaps, even though they don't have banking record, but they do have the kind of data that we are bringing to the system. And these are retailers in tier 2, tier 3, tier 4 towns. Many of them have never used a credit card either. Surprising, even though they are many times white good retailers, large shops, we won't see that problem much in the metros and the larger towns, but that's the 40% of our customers are CIBIL -1. And for those, we are working with CIBIL to actually look at PropCap CIBIL supply chain score basis this anchor data. So that's in the progress, and that's pretty much it from my side. Thank you, and open to any questions.
Thanks, Pallavi. Any questions?
Yeah, I would like to understand, Tansale here. Pallavi, when you are saying you are underwriting the credit best in asset quality, it means, are you an NBFC also, or you are just facilitating the banks to lend?
So we don't yet have an NBFC licensed, Mr. Tansale. We have applied for a license, but we work with the lending partners with the FLDG structure.
So what you underwrite is for the lending partner?
Correct, that's right.
But is it with any default clause, or it's on?
Yes, so we provide anywhere between 7.5% to 10% FLDG to our banking partners.
You provide 7 to 10% FLDG. Okay.
Yes.
Okay. That was, I was having a little confusion because you have been using the word underwriting. So unless you are a lending institution, you can't do that. So perfect. You are a correspondent.
So yeah, you can call it credit scoring. But I just want to highlight here that when we work with banks, and that's why we are only working with, we have 6 partnerships, but very closely working large scale with 4 of the banks. The reason is that there is a lot of mindset change that we work with the banks with, right? So we don't not like we are passing the files and then the underwriting. So we align those credit parameters, and it's a rubber stamp approval from banks. It's a complete channel for onboarding the customer.
And they are essentially the supply partners of the large corporates, the OEMs whom you are actually identified and partnered with. Am I right?
Yes, absolutely.
Okay. Fine. Thank you. Well done.
Thank you, Pallavi.
Thanks, everyone.
May I now invite the next presenter, Archana from Pickright Technologies.
Thank you so much for inviting me. I'm actually deeply humbled by the co-panelists who have presented and achievements, and it is very encouraging for us. We are a very early stage startup, so of course we got the FICCI award in the this FICCI season. So I'll just share my screen and. let me know whether you can see the screen.
Yes, Archana, we can see.
Yeah, thank you. So, Pickrite is a smart, intelligent platform which connects investment universe to the masses. The biggest challenge today everyone faces, including me, everyone, is where to invest, how to diversify, when to enter, when to exit. Irrespective of how much we earn, and our user base is the target audience is between 5 lakh to 50 lakh, who are not into a PMS or having a personal advisor. And the biggest challenge where everyone faces is, and because of the financial literacy curve, the banking, Jan all the account transactions, everything has opened. But still, what is the right instrument based on the user's investment thesis? That is still missing. And what and where should you be parking the funds across? It would be more always be here people calling and telling, buy insurance or you put in mutual fund. It is more of a target chasing from the other parties, or a tax saving which actually does the pull. But investment being such a main thing, it was never onto the mainstream. And that is where Pickrite really wants to bring into the mainstream, because we are now living in uncertainties and glaring at a pensionless retirement for the current generation. So that's what Pickrite is trying to create by creating so this is just a stats, and we are 1 year old, we are a very early stage startup. So we have done an analysis and that did that there are around 74 percentage of 425 million pan card holders who are lacking access to the self-directed platforms, and above the 6 to 10 lakhs or 10 to 30 lakhs, the most served sector is greater than 50 lakhs, the HNIs, which is always crowded. That's where the people want to get into, making them to get different options where you have to invest. The best of the education, of the best of handholding is happening there. But the mass where people want to invest and grow is the rest 80%, which are looking for a proper self-directed platforms in different investing instruments. So we are creating a self-directed platform using our tech is main. We are into AI ML. So we are creating using the complete India stack for the eKYC, DAPA, UPI, with the using an account aggregated framework, where we will be getting the details of the users in a way. An intelligence can be an investment identity score, where I have seen everybody talking about a CIBIL score. Pickrite wants to really come understand the different investments, what a user has been made so far, and create an investment identity score with conjunction with their risk appetite. And that score keeps on evolving as the user behavior changes, because today I might be a highly risky investor, but down the lane in 6 months I might become back to moderate. So that particular creating that intelligence onto the platform, and being a platform where we can help the complete partner ecosystems also to uh, get the knowledge through the API. So what exactly is a Pickrite? We are into short-term investment, the frequent day trading advisory platform, the long-term end-to-end platform, which is an entry platform for users who are looking to invest, and also a Save Smart Grow Wealth platform, where we nudge the users and help users to choose the right investments. When a user comes onto the platform, we actually do, with the help of account aggregator framework, which we will be integrating very shortly, and also based on the different inputs what user gives, we start creating the multi-asset allocation bucket to the user, and then start helping him or her to choose the right product on the platform, and then go ahead and invest with the partners. And with a single click, you should be able to manage your portfolios across different instruments. today, what we are live is we are live for the frequent trading recommendation, where different cash, futures, options, commodities, currencies, and we are coming out with we have created a partner ecosystem where we have partnered with all brokers and creating a complete broker driven framework. So any person who has can come on to PickRight, and they can actually look at recommendation or read something about it, and they can start trading with a single click with the partners. And on the alternate assets, we are partnering with invoice funding, US investments, peer-to-peer loans, and we are working with DigiGold and real asset platforms, creating a complete investing alternate stack as well. So user, it is like a Netflix. We want to create a Netflix type of an experience, how Netflix has revolutionized the entertainment experience. We want to create it as a more of an investing experience. Investing should not be a forceful activity. Investing should be a more of a continuous activity, because investing is like a marathon. It's not a sprint. It needs to continue. So we are working to give more of a based on the user, different options of the investing opens up. If a user is between 5 lakh to 10 lakh per annum earning user, based on what is the investing corpus, the intelligently the multi-asset bucket allocation happens. Then the only funds what he or she is eligible based on the risk will be only shown to that particular user, where they can invest and manage. As the user's goals expand, corpus expands, returns, the rest of the options will be opening up for the user. So that's what exactly PickRight is planning to do. And we are currently building that platform as we are speaking. We are talking to different ecosystem partners like Edelweiss, IIFL, all of them, to bring on to our brokerage, and also working with the different asset classes to come on to single platform. So I call it as investing operating system, IOS, where a user comes, looks at profiling, gets an identity score, understands what needs to be invested, and start creating the investing journey. We, as I just informed, we are a 10-member team, started a year back. We are 3 co-founders. We are complementing each other. I come from product and growth background. Naman comes from hardcore techie. We have a lot of intelligence in the platform where we actually give an advisory score, trust score, identity score for the user, and we want to expose it to the fintech partners in the investment domain. And Siddharth, who comes with a great investing background and a portfolio management. So the market size is huge. Everyone wants to make money, but giving a self-directed platform is the main motto and the vision of PickRight, and that's where we are on to. Thank you.
Thanks. Thank you, Archana.
Thank you.
Any questions, Tangsaleji, Sudhakarji?
I'm very happy someone using the word PMJI because that is one thing which I drew it while I was at the IBA. But Archana, when you are talking about the investment avenues, are you looking in terms of increasing the insurance penetration and the pension penetration? Also made a reference to the pensionable age and investment.
Yes, sir, definitely. So that's where the stack, what we are including alternate assets. When we create a multiple bucket allocation, we would say, if you are at a 30 years and this is what you are looking, we want you to first put it into your insurance and what type of insurances you should do, and rest of how much is your mutual fund. If you are at a 2% risk taker, so why don't you just go and put it in some of an equity which is risk. So it's a completely a user driven allocation model which user can decide, okay, this is
But
what.
is it available in the vernacular also, or it's
So
because
currently,
your client of PMJDY will understand only vernacular. And let me add my experience to your efforts. Uh, More than the product, the literacy about the product is very, very important. And what we are lacking in the whole technology world is that we are not putting enough efforts for digital literacy and the product literacy.
yes,
So,
so
are you thinking anything in terms of that?
yeah, so thank you for asking that question. In fact, we are in releasing an engagement suite of features like, in fact, TikTok videos type for investing videos, where people can actually share their thesis, what they think in 1 minute and 30 seconds video. So those are the different engagement features which we are releasing. And
Okay.
for us, it is not just a robo advisory, sir. We are having, so there are three ways on how PickRight evolves. One side of it, PickRight, is where we give an intelligent allocation to the user and give a basic product where user can go and invest across the verticals. The second part is we have the partners on one side, mutual funds. You have alternate structured products, different products with risk associated, and only user will see based on the risk and allocation. The third side is we will be curating. It is a curated advisory marketplace. So we will have the best of advisors being there. And then if a user wants to go with a premium advisor, that's where again intelligence comes. If the basic product, whatever we have done, gives you a 10% returns, there are these premium advisors where, based on your data parameters, they have constructed a product. It will be around 15%. Do you want to partner? Again, we are not making the user to pay.
Good. Let it be seen to be rolled out in the real markets. Do that.
Exactly. Yeah. So that's where we are. So as I said, a very early stage, struggling to get funds and also to arrange. So, but we are launching.
That's why I gave my interest to you. Thank you. All the best. All the best.
Thank you, sir.
Thank you, Supriya.
Thank you, sir. Archana, there is one question which is actually directed towards all women entrepreneurs, and this is a question which is, being asked by a scholar. She is researching women entrepreneurs, so she wants to understand what are the funding dynamics for you. How difficult or easy is it to pitch your idea and get funds?
Yeah, so let me be very honest. There is no difference between women or a men in entrepreneur world. And to be telling, I never faced any discrimination or anything. So I would, as a woman, I'll remove it. As an entrepreneur, based on the experience what I have as a second-time founder too, it is very, you need to be, it's your journey, and for funding happens on the way, as long as we can start pivoting and creating a platform and getting the traction, and finding that is the most difficult thing. And for me, it was fairly, I could get access to different VCs where we could pitch the idea, and it was not really difficult to present the idea. But the difficult part is to, like how just Mohan said, it's how to execute and realize that, and that's where it is. So I think that's my experience.
All right. Thank you, Archana. We will now move to the next presentation. May I invite Hena Mehta from Basis?
Yes. Hi, thank you, Supriya. It's great to be here. Loved hearing all the interesting presentations on a bunch of different pain points and problems in the market, and I'm excited to present what Basis is and what we're doing. I am just going to share my screen. Great. Hopefully everyone can see this. I'm going to try to make it full screen. Great. So so Basis, and I was glad to hear Archana's presentation as well. We are also a consumer-facing platform. Our mission or our tagline is we're powering financial independence for women. What we're envisioning to become, and we're on track to do so, is we're on track to be the one-stop a digital financial destination for urban women. We've built out an app-based platform with curated tools, advice, education, other resources for which are sort of geared and tailored towards a woman's financial life, which I'll go into in a minute on why there is a need for a platform like this to exist. So just looking at sort of the macro landscape, right? India is changing. The life of Indian women are changing, starting from, this on the left side, there is, some data around percentage of how many working women are choosing to get into salaried jobs. This is within urban areas. And then on the right, even the number of women-owned enterprises are growing, and women are looking for ways to have their own income, autonomy, and financial independence. 59% of women believe that working for themselves reduces dependence on a spouse or their family. What's also very interesting, keeping the work side aside, is India currently has the largest population of single women in our history. In urban cities alone, there's been nearly a 60% increase. This is from 2001 to 2011 in the number of urban single women, and I'm sure that number has increased even more now, nearly 9 to 10 years later. And in the age groups of 20 to 29, we've seen sort of the sharpest rise. A number of factors obviously contributing to what's enabling women to lead these independent lives, including sort of the massive digital revolution that India is currently going through. However, there is a problem, right? So if we're looking at the current state of investing in equity markets, the number of women users, or the percentage of women users for current consumer fintech apps and products in the country, there is a very, very low penetration, right? So, and these numbers that you see on this slide are probably highly inflated as well, because while these are women named accounts, there is sort of a, this hypothesis that they are managed, by men. What we learned from the very early days of Basis is that even though these numbers show that women aren't participating as much as we might need to, there is a high intent and desire to do something different for our money, right? So through our really deep research that Basis did in the very initial days, about a year and a half just since we launched our product, about 2 years since we've been working on the platform and the space, we realized a large majority of women are looking for better ways to manage their money. They have savings, they understand the importance of investing. They're not necessarily comfortable with kind of having, usually it is a male member of the family kind of taking ownership of this aspect of their lives. And there are structural differences in women's lives, right, that do impact their net worth, their finances, and how they should be making money decisions. So a few of them highlighted on this slide are, women on lower incomes. It's both a combination of the nature of jobs we may do, but then also, as we know, the gender wage gap in our country is anywhere between 25 to 35%, which is massive. Right, women live longer, which means we're going to have to plan for longer retirements. We have higher healthcare costs, and women tend to take more career breaks, whether it's for maternity, elderly care, etc. Right, so these are some aspects of women's lives that impact their money. And the issue really currently in the market today in India is that incumbent products, as we saw some of the stats in the previous slides, incumbent products have defaulted to men. And financial services in general has defaulted to men. Just historically, men have been the owners of wealth. And there isn't sort of a single platform today that's able to truly cater to what women may want to do with their money, how women make financial decisions, what our financial goals are, etc. Here are some of the pain points. These are verbatim from our user base, from all the research we've done. There is a skepticism, a trust gap when it comes to financial services, as well as, dealing with advisors or folks in the ecosystem that are helping women with this. There is a relatability issue with sort of some of the existing personal fintech platforms in the country. Number three is, I think that's more of a millennial problem, not specific to women, but we've just seen. Sorry.
हाँ रोल आउट करना है, 6 रोल आउट करो और 650 का कर दो ना.
Sorry, and also this whole thing about a knowledge gap. Money is complex, it's overwhelming, and this lack of knowledge then leads to inaction, right? So women tend to feel that financial services are not catering to them, and then money management, investments, planning out personal finances ends up taking a backseat. However, an interesting stat here is that 90% of women at some point or the other in our lives will have to manage money on our own, right? So that's sort of the pain point and the issue that we're solving for with Basis. So we're building this consumer-facing, a digital financial brand that's anchored in education and communities, and I'll walk through our solution in a few seconds. We're essentially turning these latent users, so this highly underserved, growing segment of independent women in our country who've just historically been ignored by financial services, continue to not feel financial services and content are really being able to speak to them to address their needs. We're turning these latent users into informed consumers through our solutions at Basis. We've received, it's been, like I said, about 1.5 years since we've launched our app, and we've obviously been introducing a bunch of very interesting features, as we speak. And we're building a brand that, women trust, women love, women will go to for anything they need or have questions about with respect to their money. This is just some of the, sort of the organic shout outs and testimonials we've received from some of our customer base. And we've also enjoy a very healthy NPS score. Just for reference, most banks, etc., in the country don't have NPS higher than about 40 or so. Here's a little bit about the team. So on the left is a little bit about me. My experience has been, so I've spent my entire career so far in fintech, both in the US, in New York, as well as Silicon Valley, plus in India, payments tech, brokerage tech, and lending. And started Basis along with my childhood friend and co-founder, Deepika Jaikishan, who sort of brings the domain knowledge expertise. Deepika's advised several thousand people over the course of her career with respect to money, and managed large portfolios in her capacity as a financial planner, financial advisor. Most recently, Deepika was a VP at FISDM, which is another mutual fund investing company. And started Basis, post my MBA from Wharton in the US. We are backed, we are funded. We have a great set of investors, whose names are on this slide as well. And so we're sort of excited to, have found these believers and are just kind of executing on sort of this audacious vision that we've set forth. Here's what we're doing, right? So I talked about why we're building what we're building, but how do we really solve this massive gap? So some studies show that, and this also seems like a highly inflated number, but less than 1/3 of women actually make financial decisions independently, compared to about 65% or so of men. And like I said, 9 out of 10 women will have to manage this part of their lives, their finances, and their money management at some point in their lives. So what we've built is sort of a multi-pronged platform, a multi-pronged product. So in order to fix these, what we believe the biggest sort of barriers for women to kind of start this journey is this knowledge gap and trust gap, right? So we have what we've built out, we're calling Knowledge Booster. So these are bite-sized, just short cards, lessons, modules, etc., around money. And what we've also done is kind of extracted all the complexity and density, etc., that we find generally in the market, and we've extracted what we truly believe matters to our user. And on the very the extreme right of the slide, you'll see sort of engaged community. So we're building communities, circles, groups of women that can come together, discuss different aspects of our lives that impact our money. So we've seen super interesting chats and discussions in our community, ranging from negotiating better pay, which is a massive pain point for women, as we all know, all the way to how much term insurance do I need, or what are good investment plans, etc. Right? So we've seen kind of across the spectrum of discussions, topics, etc., that women are concerned about or have pain points with regards to them. And additionally, what we're also building, or we built out these advisory tools. So again, we have goal planning tools where we've again identified gender nuanced, or we've seen a gender nuance in the types of goals women are planning for. So we've built out these tools that help women understand, how much they may need to save. We built out a proprietary recommendation algo for mutual funds to start off with, to kind of recommend how to invest and what to invest in to meet those goals. And our idea is, if you look at the center, so this part of our product, our idea is to essentially offer personalized recommendations across a suite of financial products, right? So we're looking at building out this full stack financial product and services platform. So here, the example we've put is around health insurance, which again, it's a massive market. Women specifically are highly underserved when it comes to insurance. And we've also seen like a bunch of different concerns and queries, things that have just been exacerbated as well with the pandemic and the crisis that we're all sort of witnessing in real time, right? And then, continuing with our kind of education and community bit as well, we do run workshops and other things to engage with our user base. And our idea is to partner with kind of minded financial services providers to offer products that are tailored to women, right? So for instance, with health insurance, we get a bunch of queries around like, hey, I had a scare of breast cancer. After I went to the clinic, I realized that it wasn't covered in my insurance plan, right? So what we're doing is understanding what women really need and care about when it comes to financial products, and working with the right partners to offer them products that are suited to their lives, instead of women having to, what the current state of the world is, women having to force fit ourselves into products that are not designed with them in mind. Here's some sort of earned media we've been covered by kind of leading both tech publications, lifestyle publications, and we're kind of really excited about some of the traction we've seen. Currently, we're nearing about 35,000 app installs. We've seen a healthy kind of an active user rate. So we do see coming on board, opening our products, engaging with our content and our communities, on a weekly, monthly basis, to really kind of own their financial destiny and be equipped with the right tools, services, and content to help lead a financially independent life. Here are some of our partners. So from terms of a growth standpoint, we are partnering with content platforms that are geared towards women. We're doing a bunch of stuff with women-centric other communities across the country. We also have a corporate partner program as well, and these are some of our corporate partners who we work with to sort of offer financial advice and education to their women employees. And here are 5 mutual fund houses that we've also partnered with in terms of offering products as part of our recommendations. And the idea is to build this out more with other financial services platforms as well. In terms of the business model, so we're looking at 2 things. We are looking to launch these in kind of the next quarter, so Q4 of 2021, around both sort of a subscription plan where we will be able to offer personalized advice and coaches to help women with specific queries, personalized queries around money. And the second sort of a revenue stream that we're building out is like we mentioned, like partnerships with financial services providers who are looking to tap into this market, which will be a huge growth driver for various financial institutions. We've estimated this market, our TAM, to be around $14 billion. So this is a massive, massive market. Hasn't been catered to, and where we are really going to be the one-stop platform to address women's needs, and then be able to offer them the right advice, products, and services to help manage money. And yes, we do have global ambitions. I mean, this is some macro data around this problem is not an India-specific problem. In fact, globally, so this is some data from a report that was released by Oliver Wyman around by ignoring women as a segment, globally, financial services is losing around $700 billion a year. I have the link to this. If you Google this and you're interested in seeing how this number was come up with, definitely check it out. And the reality is women are owning more wealth. They're adding more wealth to the wealth pool globally. And on the middle parts around here, this is some data from this consortium called the Financial Alliance for Women around how women are dissatisfied, unserved, have pain points that are not being addressed to in kind of the current scenario. So we're excited to, yes, build for India first, and then take our solutions and products globally as well. And yes, in summary, we're opening up, really growing the pie in financial services by opening up a growing underserved market in FinServe. We are a for women, by women fintech platform that we're building with highly targeted solutions, community driven, that kind of drives trust and makes this platform very sticky. And yes, we always hear these analogies of, are you a painkiller? Are you a vitamin? You know, what are you really solving for? And we believe it's both, right? We're solving for very urgent needs. As we've seen during this crisis, money is no longer an optional thing or something you can like worry about later. So we've seen that growing awareness and what people are concerned about really increase. But then also future wants in terms of financial goals, wealth protection, retirement, all sorts of things geared towards women. So that is the end of my presentation. Please do check out our app. We're live on both Play Store and iOS. We're also in the process of building out a web-based product as well. And I would love to hear questions or any feedback as well.
Thanks. Thank you, Hena. Any questions, Tangsaleji, Sudhakarji?
Well, it's a question and suggestion both to Hena. Hena, are you aware that in our country, the self-help groups are the strongest cooperatives run by only women? 90% of the self-help groups in this country are run by women, which are funded by the bank industry. Right. So are you having any program to connect to the women through the self-help groups?
So we're currently...
Society, let me tell you, the self-help group formation starts with the thrift society. And only after they are exhibiting that they have operated well for 6 months, they are considered good for lending. And again, I don't know whether your target client is mass or class. If it is class women, then of course it may not be material. But if it is a mass, as your earlier speaker spoke about it, it's a huge opportunity if you connect to the self-help groups which are driven by the women. And you get enough inputs from FICCI on the self-help groups itself. Just look at that.
Sure, will do. Yes, currently we are focusing on sort of tier 1, tier 2, kind of the modern, urban, independent women. But I think as we expand, that will be very interesting to look into. Thank you for that.
Thanks. Thank you, Hena. We now move to the last presentation of the day. And may I invite Vidushi Agarwal from Mitra.money and Feminines. Vidushi.
Hi everyone. Very good afternoon, and thanks Supriya for this event and the entire Wiki team for this hosting this event to showcase the fintech startups which are driven by women leadership. And it was really a great experience to hear so many startup across wholesale and providing services or doing innovation across the fintech industry. So here on that note, I will be glad to talk about our digital banking startup, where we are trying to actually revolutionize the way the people manage their money. And in next 10 minutes, I'll actually take you through how, what, and why are we building this digital banking platform, and how is it going to actually bring in more efficiency to the lives of the individuals and businesses. So if we actually look at in the present world, we all are moving towards interconnected society with better penetration of networks, technology, and a smartphone being there in every pocket. We all stay in an interconnected society. But we actually, if we look at the financial services, they still remain disconnected. Why? Because if we look at if we look at from a retail consumer, there are multiple touch points for savings, for investments, for taxation, insurance. So they have to deal with multiple touch points when they actually manage their money, which brings in inefficiency in the system, and it's a lot of time is consumed when they actually manage their money. Similarly, if we look at any business, if somebody goes to a nearby kirana shops or buy a good, it may look like a very simple transaction of a payment transfer from the buyer to seller, but at the back of it, there are so many legs which are involved in terms of accounting, GST, taxation, payments. So overall, the things are not connected to each other, and which creates trust issues in the banking industry as a whole. So there we see the opportunity to bring up with a digital banking solution to bring in more efficiency in the banking ecosystem, and as well as increase the efficiency and reduce the time the way people manage their money. So having said that, if we actually look at how the banking model works, the banks typically work on the asset liability management, where they contain the risks. They choose the risk very selectively, and that's where the pricing comes to play. The banks typically borrow at 8 and lend at 10. And that's where the way the world is changing, the banking industry is changing. There is a huge scope, what we believe, to bring in efficiency and reduce the pricing which is there in the way the money is transferred, and pass it on to the consumers. So with that, once again, yeah. So Bill Gates has once said in 1990s, banking is necessary, banks are not. In present world, if we really try to understand and deep dive into the meaning, we did research and identified that people don't need bank accounts, they need the tools of the banking to perform financial transactions. So we are working along with the banks to create an ecosystem. Similarly, the people don't need loans, they need a credit line to be available to them as and when they need whatever amount they need. Simultaneously, if we look at the terms of services, financial services, be it investments, be it payments, people want to stay connected with the ecosystem to manage their money, which is more rewarding to them, which is more value adding to them, which is simple as well as secure. So with that thought in mind, I don't know what's happening. With that thought in mind, we are building our open digital finance neo-banking system, Mitra Money, with our mission to simplify the personal finance management and doing global businesses easy. We are a very early stage startup founded in 2020. And so how we are going to build this banking startup. So initially, if you see, the banking is being looked at as a product. This is the present way the banking industry is functioning. With Mitra Money, we, as a short term, we are providing people banking as a service, where we have integrated API driven banking for people, where on a single platform they can take care of all the financial services. And in the long term, we have plans to integrate and bring the banking as a lifestyle, where where it understands people, their requirements, and provides customized solution to each and every individual. So that's our vision in a long term, to take the banking as a lifestyle for our users. So on that note, this is how the architecture is looking as we are building it. The core APIs, which we are working with the banking institutions now, with the open banking being available, a lot of banks are adopting this open banking. They are providing their APIs. So we are building that layer infrastructure where we will be connecting to the banks and to the other financial services. And on top of that, we are providing the value-added solutions to our customers, which will help simplify the personal finance for them and for wholesale customers to do global businesses easy. So this is how for retail customers, we have the solutions where there'll be a single app for all your bank accounts, value-added services, so investments, insurance, payments, and lending on a single platform. And on top of that, we are building AI-driven expense management and financial planning. Similarly, for wholesale customers, the bank accounts, collections, treasury management, insurance will be the key, which will help them to easily handle their businesses while the financial transactions are taken care of. And RegTech and RPA we will move later. And across all this will be the key, will be the innovation that we are building on our platform. So moving. So if I have to actually give you a picture of how our platform will look like, so for an individual who still struggles between managing money, they don't have time to manage their money, the single platform will have the multiple bank accounts at a similar place. We have already launched the curated investment portfolio basis the profile, risk appetite, and the time horizon of the individuals. We are at present integrated with the payment solutions, and as a resultant will be the tax filing, which will save a lot of time for individuals when they have a single platform to manage their money. On top of that, we are building expense management, which if we talk about millennial, the salary comes and it goes away. So there are no actual tools available which are well integrated with other services for them to manage their expenses, to be aware of what they are spending. And we are going to give the right financial guidance for a user as they start earning right from the first salary to how should they manage their money in the journey, so that they are financial independent at early stage in their life and they are able to achieve and live a happy financial life. So automated right investments, goal planning, these all tools are going to increase the efficiency, how the people are going to manage their money. On top of that, value added services will be more of the partnership API driven, where the access to credit and stock trading, to give a complete suite of banking network which we are planning to provide to our customers. And along with this, we are also working to increase the how we can increase the efficiency. So for that, we have come up with a very innovative solution, which is a smart savings account, where we are integrating the smart savings account, which can generate an alpha of around 1-2% than a normal bank account, by the lieu of debt mutual funds. Now, if I have to talk a little bit more about the debt market, India, the debt market is advancing and people are becoming more and more aware and becoming accessible to the people. So the ultimate purpose of the ecosystem will be the money will flow directly into such instruments to increase the efficiency. So people will have higher returns on their savings, and when there is a curated portfolio of the investments, not only mutual funds, it will be across equity, gold, PPF. So a single platform, and that's how the journey of the user will look like. A simple registration on the app, multiple bank accounts, easy payments, automated investments, goal planning, and which will result in automatic tax filing, as the platform will already be aware of the income and expense of the person because of the payments which are happening from the smart savings account, will lead to the happy and satisfied customer who is using the platform. Having said that, these are some of the screens which is already there live on the store, all accounts in one place, quick tracking of accounts, smart savings account we are already live with. People can put their money in the smart savings, and autopilot mode they can take out the money. We are in the process of integrating bill payments onto our system. Smart investments, as it is said that one should not keep all eggs in the same basket. So we are live with the portfolio where the person bases the time horizon, risk appetite, and the amount the person wants to invest. The system already throws up the best advisory into which all funds they should invest, and we will be integrating with the other financial products, with other investment products soon as we move forward. Along with that, while we are really happy the way we are bringing up the technology, the expert assistance will always be there at the back of this entire front end show. So these are the few major USPs, which differentiators, which we are building on our platform. Like I mentioned earlier, unified platform for the complete money management. We are focusing a lot on the UI UX. If we see the millennial, for them, the money management should be a very easy thing. The way they book, the way they order food online, or the way they do shopping online, it should be as simple, as engaging and interesting for them to manage their money, and as simple as that. On top of that, when our system will be starting right from the beginning of the value chain, when the person starts earning money, to tell how the person should start allocating, what should be the first few steps that a person should do in allocating the money, so that the journey is smooth and the person is aware during the journey where all the money should go and how should the person manage the money. So that will play a key role on our platform. Inbuilt advisory, as I mentioned, highly scalable and secure infrastructure is what we are building. Faster time to market, given that it's all digital, and with the, like I mentioned earlier, the society is interconnected. So faster time to market, low cost model than the banking, and API driven. That's where the advantage will come to connect to various financial services via API, and provide a unified platform for people to make it very simple, convenient, and more efficient. So launched in 2020, this is the progress. The KYC registration, smart savings account, addition, withdrawal of funds, mutual fund investments are already live on our platform. We are in the process of testing the bill payment APIs and banking infrastructure. We are also in discussion with a few banks to tie up and to start opening the bank account on our platform. So bank tie-ups are also on this. So like I mentioned, the enhanced user experience, which is the major challenge these days, that people want it to be very simple and convenient, is what we are trying to build, and that will play to our advantage, along with bringing in various financial services on a single platform. So this is how we are playing to our strength. Definitely digital. Going digital is the key these days. Events and some of the HNIs offline, which we are building to offline customers as well, which are live already. So this is how we are going in the market. We have already done a couple of events, tie-ups with the corporate, which I'm going to cover as we go. Yeah, so so a lot of registrations we have already done. Alliances are already there. We have a live platform pipeline. We are in discussion with the banks and the NPCI For the partnerships, we have around 10 crores of asset under management and client registrations. Corporate tie-ups, already 10 corporates and around 40 we are in discussion with. So these are the various milestones which we have in our mind. We are already there with the smart savings current account, mutual fund investments, fund transfer, and payment solutions is what we are testing at present. And then next comes the integration with banks. And as we move forward, we will be bringing in all other investment solutions, goal planning on our platform. And then with that, we have a very classic use case where we are connecting B2B2C model. So what I spoke more about is B2C model, where we are trying to solve the problem of an individual to deal with multiple platforms, multiple partners in the ecosystem to manage their money, and lack of time doesn't allow them to bring in that efficiency when they manage their money. So that's more about B2C, which we are building at present. And the next step is what we have plans and vision in mind to build the B2B2C, where we will be solving the first use case. What we are building is from the payroll processing, and that's where we are going to capture the market. So this is our team. Myself, Vidushi, the founder and CEO of Mitra Money. After MBA, I've been worked into the. I've led teams into the sales, been into wealth management, corporate relationships, and Harsh is a qualified chartered accountant, and he again has 10 plus years of experience in consulting and banking industry. Amrit, he's a CTO, has started coding right from the age of 14, and he brings in that innovation around technology to build a robust, scalable system. And with that, I would be happy to take any questions that you have.
Thank you, Vidushi. Tangsale sir, any questions? Sudhakar ji?
Specific, Supriya.
Yes, sir.
I said nothing specific.
Okay. Okay, thank you, Vidushi, for
Thanks,
the excellent presentation, and all the very best to you. With this, now I invite Mr. Tangsale. He is advisor of FICCI's Financial Sector Committee, former chairman Central Bank of India, and former chief executive of Indian Banks Association, to kindly, deliver the closing remarks. Over to you, sir.
Thanks, Supriya. And I must at the outset appreciate FICCI, Jyoti in particular, and Sudhakar supporting the fintech world to really showcase themselves on their capabilities. I think I have must have attended a couple of fintech shows over the last 6 months, and that's my compliment to you all. But my greatest excitement and compliments to all the 8 presenters, the women presenter, who have exhibited that yes, they understand the problems well. They identified the problems in proper perspective and are trying to give the solutions. But while doing so, as a banker, I would like to give a few suggestions to all the presenters that ultimately what makes a difference is that you have to make your initiative a profitable venture, a scalable venture, a sustainable venture. And when you have to work on all these 3 initiatives, I think most important part for you is to understand the domain of your customers, not only from the India perspective, but from Bharat perspective also. Because a couple of your initiatives have got to reach to the Bharat, which we discussed, like PMJDY accounts. When I say Bharat, I mean the tier 3 to tier 6 kind of a clients, which have to be really onboarded on that. And for which enough is required to be on the digital literacy as well as the financial literacy. If you really want to see that there's a real inclusion of the targeted client for the activities which you are thinking in terms of promoting. The second part, which I would like to say, that whether you are working for the corporate as an end client, or the retailer as an end client, or banker or lending institution as an end client, you have to always be very cautious of that. Are you substituting them? Are you supplementing them or complementing them? And what are the opportunities for collaboration? And that's very, very important, that when you talk this language of collaboration, supplementing and complementing. So coming to the Vidushi's comment, banking is necessary, banks are not. Let me tell you that Bill Gates has been proved wrong here. Banks will be required. Banks can never go, whether they are neo banks or physical bank or open banking or whatever it is. The banks will be required. But yes, the way the banking is being done is definitely has changed and will change, as he has predicted that banking is necessary. And thus, all of you as a fintech uh, promoters have to understand that you are uh, collaborating, you are complementing, you are supplementing. Once you understand this part, then you have to always make sure that when you pitch yourself, how do you really go with the cost benefit analysis? What kind of a cost efficiencies you are providing to your end customers or your user customer? What kind of operational efficiency you are giving? If you are achieving all that, I think you will be definitely sustainable and scalable entity. And last, I would like to say that while being in this area for a long, as a banker, as a representative of the industry, working with the various technology companies, then the FICCI's engagement for last more than 6 months to get fintech world. I think FICCI has thought of creating a mentor-mentee platform, and it's very essential that you have the mentors who have soiled their hands in the domain. Because if you have the mentors who have soiled their hands in the domain, it may be very useful for you to really understand the problem, because understanding the problem from the external side and from the people who have soiled the hands, it makes a lot of difference. So that's an opportunity you should always avail. Uh, with these words, I'll once again compliment all the 8 presenters, wish them all the very best. Would like to see them real successful, uh, particularly as the women entrepreneur. I totally agree with the comment of one of the presenters when it comes to the funding. I don't think there is a differentiation whether it is a women promoter or a man promoter. Yes, your conviction about your own product is more important to the investor rather than who you are from the gender perspective. So that's really not a thing to go. And thanks to the FICCI team led by Sudhakar, Jyoti, Supriya, and all others. Thank you very much. All the very best. Supriya, I'm through.
All right, sir. Thank you. Thank you to all the presenters and thank you to all the participants. Wish you all the very best. Thank you. Bye-bye.
Thank you. Bye.
Thank you. Thank you so much for having us here.
Thanks, guys. Bye.